With more on the U.S. China trade war, I'm joined now by Anthony Chan in Portland, Oregon. He's a former chief economist at JPMorgan Chase Co. We just heard from that woman saying she's a pawn in the trade war. You can be sacrificed if you're a pawn. We're not just hearing that from lobster fishermen in Maine. We're hearing that from, soybean farmers in Iowa. This trade war is really having an impact on a lot of folks throughout the country, isn't it?
There's no question. I was recently in South Korea, and there were some investors there that have farms in Brazil, and they're excited because all of a sudden with this trade tensions, all of a sudden China is now looking at other sources of grain, and Brazil certainly is one of those countries. And they were very excited about the fact that even after the trade tensions are sort of dissipate, that we will continue to see China buying supplies from Brazil, and that will hurt U.S. farmers over a longer period of time.
So, Anthony, both sides said the right things following the last round of talks, each side saying the talks were either productive or constructive. So what should we be looking for in this next round of talks, about 2 weeks out now?
I think what we should be looking for are additional signs that both sides are ready to sort of have a trade truce. I don't think that a large deal, which you hear the president saying that's exactly what he wants, is really something that's going to happen overnight, because the source of dissension is quite complicated. It's going to take months, if not years, to resolve everything. But a trade truce, or at least a de-escalation, is exactly what financial markets need, and is exactly what businesses need on both sides in order to continue to plan. Because with all this uncertainty, it is very difficult for businesses both in China and in the United States to continue to operate with this level of uncertainty, not to mention the fact that you've seen in the United States, you've seen that business sentiment, and just today, consumer confidence has been hit negatively because of all this trade uncertainty. So anything that de-escalates the tension will be a positive development for both sides.
And to your point, Christine Lagarde of the International Monetary Fund is once again sounding the alarm bells, saying this trade war is a dark cloud, a big dark cloud out there, the biggest hurdle for global growth in 2020. She says it means less jobs, less investment, more uncertainty, which you just mentioned. Is any of that likely to prod either side to try and embrace a truce like you're talking about?
I think that it's certainly going to be a catalyst or an incentive for both sides to move, because remember that as global economic growth dries up or at least slows down, it means that markets for both countries actually become a lot more difficult. And in fact, you've seen the OECD lowering their estimates of global economic growth. The U.S. exports all over the world. Of course, China does the same thing. The only difference here is that exports as a share of the overall economy is much smaller for the United States. So in some sense, the United States has a slight advantage. But let's make no mistake about this. Both sides have much to lose from not reaching some sort of a deal. And that's even before we start to incorporate the political implications of not reaching a deal as we get closer and closer to the 2020 elections for the United States.
Well, we'll definitely be watching these latest round of talks. Anthony, always a pleasure talking to you. Thanks so much.